Regan F Homavazir joins in from Darashaw and Company. Regan, morning. Are we going to see a short-term rally, you think, for the Nifty now, having hit 4650? And if yes, what could be the extent of that pullback?
Good morning, Odyan. First and foremost, let me just repeat a little of what I had said the last time. I had said that should 5200 be decisively broken, we will see 4700 directly because there is no real support in between that band. And considering the steepness of the fall that we've had off late, the logical explanation to that would be a counter trend rally or a pullback. Now, the extent of the pullback on the Nifty could be up to 4930. So there's a small zone there between 4902 to 4930. It's another matter whether somebody wants to play for that pullback or not. The larger term picture still remains negative for the Nifty. I would say this 4700, which was a very key target since the past many months, has been achieved and it was long overdue. So 4700 is met, and should 4700 get decisively broken, this step 2, 4200 will be there very soon. So we continue to say that Sensex will go under 15,000 and the Nifty could hover at 42 very soon.
Good morning. Is there a sense of a timeline that you have along with this move for the index, because this breach of 47 has come fairly fast for the market in the series gone by? How soon do you think this counter trend rally and then an eventual retracement to 4200 may play out?
Now, what has been happening is from 5200 to 4700, there have been multiple stocks that have broken some very significant levels. Now, should these levels start to get accelerated on the downside, the view of 4700 could be attained very quickly. The extent of time cannot be precisely gauged, but that could happen soon enough in a quarter or so.
Some of your peers have been pointing out, Regan, that the move in this market has come even before there's been any substantive breakdown in global markets. What kind of indications do you get when you analyze the charts of the Dow and the S&P in terms of immediate near-term downside risk?
See, the Dow has not broken the 4700 equivalent on the Nifty. That level is somewhere around 10,700. We are still above that level. So obviously, Nifty has been much weaker than the Dow in this fall. But should the Dow go below 10,700, I am expecting a crash to about 9,000 and 9,600. So that is the zone where the Dow could ultimately target should 10,700 decisively be broken. In that case, obviously the Nifty is not going to be languishing at 4,700. It could steeply accelerate on the downside.
What are your long-term targets, Regan, for the Sensex and Nifty, where you started being bearish with? Is that 4200 Nifty or is it even lower?
4200 on the Nifty would be the target, Odyan, because what has happened is right from 5900 onwards, we've been constantly talking of 4200. And this view is been panning out across 9 to 10 months approximately. We've been holding a very bearish stance, and now that the stance is playing out on the market, I would say 4200 is the level of investment.
What about the rupee dollar? Where do you see that going technically?
The rupee dollar is actually in a state where it's become neutral, because the rupee can appreciate by another 2 rupees and it could weaken by another 2 rupees. But if you consider the weight of evidence, which we call it in technical parlance, the rupee can ultimately head to 54, but we are expecting the rupee to face some serious selling pressure at this current point.
If your medium-term outlook is that the market finds some kind of support at 4200, Regan, what kind of new range do you think it set itself up for after having broken this 4700 support?
See, 4700 support is something that the market is looking at. And recently when we retested that, you will understand that there was significant volume, maybe because of expiry, maybe because of other factors. But should this 4700, which currently hasn't gone, does go decisively, then the range is setting for the lower end, where you could have a scenario where you are trading between 4200 and 4700 for a fairly long time.
Just to focus on individual stocks now, Regan, how would you approach some of the relative outperformers? Technology, for instance, where Infosys has done better than many of its peers in the Nifty.
I'm approximately at 2800. We were looking at Infosys coming to 2440. I would continue to hold that stance. Infosys, the bare minimum that I think it will correct would be 2440. It could be a relative outperformer, but that is the target that we'll watch for first.
What's the call on something like an ICICI Bank technically?
ICICI Bank has done something very differently, something which was not expected by the market, but we were looking at it. ICICI has corrected very viciously and has gone under its support of 760 rupees. Now ICICI by technical yardsticks had broken very key critical supports, if I can quote that, and the support now range is between 615 and 575. We are expecting ICICI to land to that target of 615 to 575.
In the infrastructure related space, what do the charts of BHEL and JP Associates look like to you?
Well, infrastructure is a decimated space, let's be very honest, because it has had no real pullback, no real rally. Now let's talk about BHEL. BHEL has been an absolutely disappointing stock where for the past 3 years all investments that have been made have lost money and the stock price has nearly become half. At this point, BHEL has some very significant supports placed between 230 and 250. One needs to look at BHEL at this point. It could be an investment area, but upsides in the immediate term are something that one must not expect. It's an investment stock which may not play out immediately, but it could have a trading rally up to 320 rupees. And whereas JP Associates is concerned, JP Associates has witnessed some very decent volatility in the recent past where it had gone from 60 to 85 and it's now back there. We would recommend that one must look at JP Associates to accumulate the stock around 55 rupees and play for a target back at 80, because that's the range that JP Associates has now got into.
The star of the series, Regan, or in fact the whole year, has been Hindustan Unilever. Is it a good idea to still buy into that one?
We've been very bullish on the stock right from 280 rupees and we continue to remain bullish on this stock. The first target that we had outlined for HUL was 450 and the second being 600 rupees. Today where it stands at about 385, I would still say and recommend that it should be one of your top 5 holdings in the market in your portfolio, and should it come near 350 rupees it would be an aggressive buy.
Good speaking with you, Regan. Thanks for joining in today. That's a word on the technicals painting a concerning picture. The market